Hello everybody. In the current affairs this week, the week ended 7th of September 2025. This week again, the Indian Rupee vis-a-vis the US dollar hit a new low of 88.372 a dollar. The rupee finally closed at the rate of 88.172 a US dollar. The basic reason for this weakness of the Indian rupee has its roots in the new economic policies of the new US administration, and basically not on account of the weakening of the Indian economy. The latest decline is attributed to one of the fears that after that 50% tariff on Indian goods, the next leg of tariffs, as it is feared, could be on export of Indian IT services to the US. And this could lead to a major impact on the Indian economy and the way the exchange rate equation is working between India and the US. Another reason for the strengthening of the US dollar across all the major currencies in the world are positive economic figures released by the US. On account of the fears of the way the tariffs would impact India, the foreign institutional investors have been the constant sellers in the Indian equity markets, and they have been pulling away US dollars and taking it back to their home countries. This is also impacting the exchange rate equation insofar as India is concerned. One another reason is that the Indian government and the Reserve Bank of India are pursuing a policy of openness in the value of the Indian rupee. By that, what I would mean is that the Reserve Bank of India does not intervene so very actively even when there is a certain level of decline in the value of the Indian rupee. And as it is discussed in certain quarters, the reason why Reserve Bank of India is pursuing this kind of a policy where it is allowing a calibrated fall of the Indian rupee is for the reason that the moment a currency weakens, it boosts exports of the goods made in that economy. And the other way around, that all the imports made in the country become expensive. And this could be a strategy to develop the local industry. A similar kind of strategy was pursued by China in the earlier years, in the times when they started this entire massive development process, and US has been accusing them that they have made the Chinese yuan deliberately at a lower rate so that their exports from China can be boosted. Insofar as the Indian stock markets are concerned, the rub-off of the positive impact of the GST was very much prevalent on the Indian stock market. Nifty 50 was up by 1.3%. Nifty mid cap was up by around 2%, and Nifty small cap was up by around 3%. FIIs, as I said, continued to be sellers to the extent of more than 5,000 crores, and DIIs continued their buying to the extent of more than 13,000 crores. One of the sector which is expected to benefit the most out of the GST cut is the auto sector. In last 1 week, the auto sector stocks Nifty Auto Index was up by more than 5%, and in last 1 month, it has appreciated by more than 10%. On the international commodity front, Brent crude was weak and it was down by around 4%. But gold and silver in India were up. Gold was up by around 4% and silver was up by around 5%. In the US markets, Nasdaq was up by more than 1% and S&P was by and large unchanged. MSCI China was up by around 2%. In the earlier episodes, I have been saying that the moment there is an upgrade of any country by an international rating agency, that leads to a lower cost of borrowings for the corporates when they borrow from outside of the country. And insofar as India is concerned, yes, there has been an upgrade on the credit rating of India, and that has positively actually impacted the cost of borrowings. State Bank of India this week raised $500 million US dollars. The rate at which it raised that money from the international market was US 10-year GSEC rate plus 75 basis point. And this very same fundraise or similar kind of fundraise in the month of November 24 was T, which is the treasury rate of US for 5-year paper plus 82 bips. So straight away, there was a saving in the cost of funds which the SBI paid just on account of this credit rating betterment insofar as the country rating is concerned. India has approved 10 semiconductor units spread across the entire country. 4 of these semiconductor units are coming up in Gujarat, 1 in Punjab, 1 in UP, 1 in Assam, 1 in Odisha, and 1 in Andhra Pradesh. So, India is recognizing the need to develop its semiconductor industry, which is very positive news for self-reliance for India. That is all for this week. Thank you.